make yourselves comfortable, get a cup of tea, get a drink, and just let's get into this format. I'm just going to run through very few slides. I don't like a lot of slides, so I'm just going to get straight to the point on this. And I'm going to talk about a little bit about my background, my journey into day trading, but more importantly, I'm going to talk about how this can affect you. Sorry, I can just hear my voice. Hold on 1 second. Sorry, I just got distracted there. Right, okay, so day trading. What is the essence of day trading in my terms? This is the, let me get rid of that text, hang on. This is the DAX. So it's been a really pretty good week for the DAX, and what we have seen is a move from, well, this was this last week? No, this was yesterday. So we've seen a move from 12.8 to 13.3. So we're going to talk about, once I've done the initial sort of few slides, I'm going to talk about what this red line is and how it affects my trading and how you can get in on, that's the open this morning in London, and how you can get in on a move like that and where you might want to take profits if you're in the move. Okay, so we're going to talk about me for a very short period, and then we're going to get into the actual presentation. They're going to get into looking at the markets itself. Right. By all means, ask any questions as we go along. I've not got my headphones on at the moment, but I will put them on once I've got time for questions. There is a chat box there. If you want to ask any questions, then by all means, fire your questions into the chat box initially, and then we can talk later on. Okay, so I have been trading for quite a long time. I've been day trading for 20 years. I've been investing in my own pension and funds since the mid-80s, so a long time ago. So I started in the oil futures, and I was taught by some US futures traders. The US, up until not so long ago, were far more experienced as day traders than us in the UK and Europe. They've been trading their own pensions and day trading accounts for many years, more than before the UK came into it and Europe got into it with these retail brokers accounts. So I was trained by some top US traders. One guy in which actually worked in the old pits. Of course, the pits are gone now with digital electronic trading. But if you've got somebody who's actually been in a futures pit, they really know how these markets work from the inside out, and that was a great support for me and a good investment, and that got me into all the technicals and the trade management that I needed to get going in as a day trader myself. So I'm going to share some of those elements with you. So I realized as once I'd done that trading and I was trading my own account, I realized that there were a few traditional traders' tools that I could use, but if I combine them and put them together, they really made my trading very efficient. So what I've not done here is I have not reinvented the trading wheel. I'm not holding myself out to be a true trading guru. What I am holding myself out to be is a professional, because there's a massive difference. So in all those years of trading, I developed the system a long time ago, but markets change, and post-COVID, things have changed yet again, and so I've adapted my trading. I'm constantly adapting my trading. So what I teach and what I trade in the room with my room full of traders does change periodically, and all those guys get retrained up when I do that, and so we can exploit the system and use it. But the point is, you've got to have a system. Now, most of you, I'm sure, probably realize that anyway, but you've got to have a system that is simple and you can follow. Because it sounds basic, and I'm sure most of you, if not all of you, appreciate that, but how many people actually have a very, very specific system that they apply in these markets every single day? Now, so the focus of my trading is limited to two key markets only. That's oil and Dow. I trade oil a lot less than I trade Dow. I trade Dow most days, if not every day. I focus on the system, and I have one specific time frame that I use for an entry. Now, what I normally do is, well, I say normally, post-COVID, I'm trading small size at the open because the volatility is so much more extreme now. And so what I'm doing is, if I get stopped out, then and then I take a measure of the system, the measure of the open in the market, and realize that I was correct in the direction of the market, I just maybe mismanaged my entry, I will take a maximum of 2 trades, both small size. But the key to what I'm doing is, I'm measuring what the market's doing at the open, determining whether it's a risk on, risk off day, in other words, whether it's bullish or bearish, and then I'm adding to trades, adding to winning trades. Now, just do a quick poll. How many people actually add to winning trades? How many people listening to me now actually add to winning trades? Because I find it's very, very few people. What tends to happen is people open their accounts, perhaps they're less experienced, see the market move one way and whoops, oh, it's moving the other way, and then just try and trade all the different directions. That's not me. I'm looking for the direction, the risk appetite on that day. I'm not using indicators. I'm just using a very simple system and one time frame to actually gauge my entry. I'm trading small size, I'm adding to winning trades. So if something is really breaking up, I'll look for the way in which it breaks at the open. Ideally buy inside the range. Sometimes that doesn't happen, sometimes it does, depending on what type of market we've got that day. But I will add on all the pullbacks, and likewise if we're trending to the downside, I will add on any pullbacks. Now sometimes, on a rare occasion where I miss the direction at the open for whatever reason, maybe I got stopped out, maybe the markets were jiggling around on this particular day. If for any reason I miss the initial move, I can just enter and start to build my account as the market unfolds and as the direction unfolds on that day. So that's the essence of my trading. It's a focus, it's a routine, and it's a very specific entry level. And that's all I'm doing day in, day out. So now what I don't do is sit back and say, oh, I got some fantastic system, it works every day, it's brilliant. What I do is I think about, I go over the system. Like I said, I make minor adjustments to it every sort of period, every sort of market cycle. So I do that the weekend, and I do it during the week. Particularly, I stand back and I look at it very closely midweek. So I'm not sitting there just bashing out trades left, right, and centre. I am looking at what the market's doing, making sure I'm sticking to my rules, and I'm adapting to the kind of market we've got in that particular day, that particular week, that particular month. In the meantime, for the sake of the people in my training room and for my own sake, I build a very, very detailed chart library of my system. So I have a set number of folders full of screenshots of how my system works on a given day. For example, if we are coming into a big Fed day, the behavior that you can expect on a Fed day is quite different from so an early part of the week in a normal week when there isn't a Fed day. So my system is able to adapt to different conditions, and it's able to adapt to in the run-ups to some of the key parts of the month. And also there is a method of I tend to trade the actual data announcements less and less these days. Why? Because I don't need to. Traditionally, if you had a Fed day, the markets would come out, you get a fantastic move one way or the other, and then you trade it back to that direction, and sit in the trade and then wait for it to break out. That doesn't tend to work anymore. It can still work, but more often than not, you get a move. The markets just make a move, wait till the open comes in, and then trade the range that you just seen in the data movement. Okay, but the point is of this particular sort of sheet, what I'm saying is, yeah, I don't know it all. I don't sit there and think this is a fantastic system. I continue to work at it, put the time in, and make sure that if I am giving out alerts, if I am suggesting to the guys in my training room what I'm doing, that it's fine-tuned to whatever the system is telling me. We'll look at some actual markets in a minute. So I stick to the system. I use small position size at the open, and then I add to winning trades. And that's as simple as that. And I do that every day, and that helps me build my account. So is it for you? Is this something, can everybody make a living out of day trading? In theory, yes. In practice, no. As a minimum, you need 3 to 6 months technical trading experience. You need to have done a basic technical entry course, and you need to understand the rudiments of trend lines, moving averages, and support and resistance. So I'm assuming for now that everybody in this room, everybody watching this video knows that, understands that. Those are the 3 elements. And then you need to train to understand a system, and initially trade pennies. Demo accounts are good. I do recommend demo accounts, but ultimately actually committing a little bit of capital does commit you to that trade, psychologically commits you to that trade. So I would suggest in the early days you just trade a very, very small size. A lot of retail broker accounts let you trade 50p. Some broker accounts let you trade even less. Okay, so, and the other thing that I haven't put on here, which I should have done, is time allocation. You're going to want to know the sort of time spans of what it's going to take to get you to be a consistent profitable trader, and the time that you'll need to spend on it during any one trading day. Let's start with the latter first. Once you are experienced and once you have a system, I think the best period of time to trade is the first 2 hours of the US Open. Now, as it happens today, the Euro session was better than the US session. That's rare. I much prefer the US session. For a start, it kicks in well after lunch. You can have a nice leisurely lunch, relax, get some exercise, do your preparation, get your charts up and do your preparation. So I much prefer the US session, but so you need the best time to trade is about the first 2 hours of the US Open. So the US opens at 2:30 for most of the year, all bar a few weeks when the time change is different. And I would suggest you pack up and finish around about 4:30. So about a 1 to 2 hour. Sometimes we open the trading room, grab 100 pips or whatever, realize that the market is potentially range bound, and we close around about 3 o'clock, 3:30 and stop trading. The other period which has been very fruitful in recent times is the last hour of the day, last hour of the US, so 8 to 9 p.m. There's last week there was several moves that gave you at least 1 to 200 pips in that last hour. So sometimes you just let the market just dither around. Sometimes in the last hour they'll break one way or the other, and that's been very profitable post-COVID as well, much more so than pre-COVID. So there are other markets you can trade. The DAX works roughly at half the speed of the Dow. So if you don't like the volatility of the Dow, then consider trading in the London Open period. If you consider yourself a very experienced trader and a good day trader, and you prove yourself, cut your teeth on the Dow, then you might want to consider the oil. Now, further down the line, if you want to really exploit this and make a healthy living out of this, then I would suggest you go right into the futures market. So I have a US account and I trade in the futures market, and on oil, for example, a 1 cent move in oil on a full futures contract is worth $10 a 1 cent move. So if you have one contract and oil moves $1, oh, I'm just about to draw a pound sign. So oil moves $1, so from 40, let's say 40 to 41, which you did yesterday, you got $1,000. So oil doesn't do that every day, but that's the kind of money much further down the line. I'm not suggesting you do that anywhere near the beginning of your journey into day trading, but that's the sort of money that you could be doing as a professional day trader. Now, what could you be doing in the early stages of your trading career? So the other key aspect to day trading is compound growth. So you could have a small account of £500 and trading the system, trading the open range that we do, and I'll talk about that in a minute. You could be trading 50p a point. Now I'm going in risking 35 pips a trade, most trades, very rarely. Now you might say, well, that's really small, Mike, but that's the nature of the system. I would much rather get a 35 pip stop out than have a 50, 60 pip or 100 pip stop loss and continually get 1, 2, 3 stop outs of that magnitude. Now I find this works really, really well because of the way we fine-tune the system to adapt post-COVID. 35 pip stops is adequate. That's good enough. So if you trade 50p a point, getting 100 pips a day, you're looking at £50 a day within a 1 to 2 hour period. So that's potentially £1,000 a month. If you then risk, once you've proved yourself in the initial period in your life as a day trader, you can then go up to £1 a point. So you take it, risk £35 a trade. you could then potentially make £100 a day and £2,000 a month, and so on. But the point is, start small, understand that, and the system at the moment is in the region of 65 to 70% successful. That does vary. Today has been, on the Dow, has been a very range-bound day. The DAX has been great, but on this particular day, the Dow has been pretty limited. So that's, you won't make 100 pips every day, but on some days where you're adding to a trade, on a good day in the Dow, I could make, by adding to a trade, there might be a 200 to 300 pip move to the downside or the upside. I could exploit that by adding to my trade and get the equivalent of 450 to 500 pips in a day out of a 300 pip move by adding to my trade, adding to a winning trade. Yeah. So yeah, that's what you can do. That's what is out there if you know how to go about it. And this is, I saw this actually written today. I saw somebody tweeted this. I don't know who he was, but I really like this. It made the point that is always uppermost in my mind. If you want to be a pilot, it takes 5 years of trading. If you want to be a lawyer, yeah, that's 3-year degree, 1-year conversion, and 3 years training. So it's actually more than that. So it's probably about 8 years, and that's the same for a doctor, isn't it? Boxer, 4 to 5 years practice. Even a chef, yeah, and yet so many people open an account, do 3 to 6 months basic training, open an account, jump on a day trading course, and start trading, 1, 2, 3, £5 a day, £5 a point. So it takes time. It's about learning not just day trading, but learning how markets work, learning the way in which the market can be, I was going to use the word manipulated. It's not manipulated, it's the wrong word, but how the noise, that's a better word. There's a lot of noise in the market. There's a lot of noise in the press. I regularly see the press saying, "Oh, the market's going to drop. They're going to drop like a stone," and that day the market creeps up 1, 2, 300 pips, or vice versa. The market say CMB will say, "Oh, this is it's going to open really well. Expect a decent move. Risk on today," and of course it just you get a little bit of a blip and push higher, and it just rolls over. So a lot of noise out there in the charts, in the press, in the news, everywhere there's noise. That's why, unless you've got a system, you cannot succeed. And that's the system doesn't have to be really, really tight. It has to be simple, it has to be workable, and above all, it has to be something that you understand and relate to. So let's now come out of that. Let me come out of this and just look at some charts. So like I said, this is a 10-minute chart of the DAX showing you what has happened this week. So the actual start of the week is here. Where are we? It's 21st today. That's the start of the week. That's obviously where we are right now. So what you're seeing on this chart, and this is just one of a very few short list of elements that affect the way in which I trade. This red dotted line is the Friday night close. That's all it is. So all this noise over here and all this noise over here, all we've done in the trading period of Monday was pivot around the Friday close. So why is that significant? Because, well, obviously, we can see we've got the benefit of hindsight now. We can see it's run, but it's significant because if you've got a market that is spending most of its time underneath the Friday close, then short any highs. If you've got a market that moves significantly out of its Friday range, buy pullbacks. And more importantly, how do you actually do? Okay, that's fine. If with benefit of hindsight, we know that's broken. That's done really well. What about the actual day? Because this was Monday. What about trading on the actual day? I hear you ask. Well, if you then look at, I've already mentioned the London Open. So this was the first 10-minute trading period today on the DAX, showing how all of this support down here at 13,155 was holding. So even before London woke up and started trading their, started opening their accounts, you already had a big move up from this late Asian period and this European Open into 256. So all they've done in the London Open is dragged it down to support and broken it out. But the breakout wasn't particularly significant, wasn't particularly extensive. So at the latter half of the day, and as the US came to the market, they dragged it all the way back down to where it came from, and more. So that's the key. So it broke. So we already had all this. So we're above the gap. We had already had a push up in post Asia and into the Central European Open, and all London did was drag it back down to that support, break it out, and then this is doldrums. Normally, like I said, if you trade about an hour to 1 to 2 hours, 10 to 10:30 is European doldrums, and that's exactly this high was 10 o'clock. So I talk about that a lot in the room. So by the time we get to 10 o'clock, this is all over. 10 o'clock is here. So we get London Open here at 8. So we've got 3 time periods. Actually I'll take that off because you can't see the price action. There's the Asian close, breaks up. There's the Central European Open. There's the London Open. Okay, so lots of clues there that this could push up, and this pushed into a major resistance level. So we don't trade on a 10-minute chart. We trade on a 5-minute chart. We range the first 5-minute high and low, and then we look for the break. Look to see which way it breaks. Post-COVID, I've added to this, and we trade overnight gaps. So, for example, the cash close on Monday was, let me go and find the cash close. Cash close in the DAX was there. Let me just double check, make sure. Yeah, the cash close was 13,060. I went on record talking about, on Monday, talking about buying these dips. I showed you on the email, I don't know if you've seen it, I showed you the call I made on the Dow at 550 yesterday. So that's the cash close. We overnight or into the US period, we stayed above it, and so the market was so strong, we attempted to backfill into the cash close. Markets don't like gaps, that's why they're so important. So markets tend to, if the gap is so big, you tend to get a partial fill somewhere around. If the market is a lot tight, if the gap is a lot tighter, you're more likely to get a complete fill. So this is what I call a gap and go setup. And there's a very, very specific strategy for gap and go, very specific. We look for, there are certain price levels that we look for on a gap and go strategy. A gap and go strategy is saying if the gap is that big on the upside, or it can be to the downside, obviously. If the gap is so big, normally it's over 100 pips on the Dow. It can be over 70 pips on the DAX. If there's a gap and go strategy, there's a very specific strategy we look for and trade. And that overrides the open range. So we fine tune it to override even the open range. Okay. Now, if you want to be part of a trading group, if you want to learn a system and be part of a trading group, then this is Scalper School. This is where I teach the system, and then you get what if you come on the program, then you've got access to my live trading room. And there is also the live trading room operates 4 sessions a week, so Tuesday to Friday. But 5 days a week you have an alert system. So what I sent you on the email was a screenshot of the 550 call I made yesterday on the Dow, and the Dow is still at 27,000. So it's a potential 400 to 500 pip alert on Monday that I gave you on the, or I gave the guys in my trading room on the Dow. So, like I said, we trade 4 sessions a week in the live trading room. The alerts is 5 days, but this is the main program. It's a 4-hour intensive program on the system, and we go through finite detail on exactly what the system is, how it operates, the variables, and there are a short list of variables that you can experience, i.e. the noise. And then we have various strategies that we use, predominantly the open break. When the market is a lot calmer and there isn't any significant gap, we just trade the open break. When the market is volatile and we have gaps over 100 pips, we have a gap and go strategy. And then the big reload. If we have a situation where we have what we call the big reload, in other words, the market's broken out one way. If the market retraces to the breakout level, then the reload setup gives you an entry point. Again, it's quite specific. And I recommend you sit in that trade. If you get a reload setup, you sit in that trade to the end of the day. And then you take profits into the close. Okay, so the system effectively works in 3 ways then. Gap and go for big gaps. Otherwise, open break. If after the open break you get a reload set up, then we hold that into the end of the day. There is an intraday reversal system. Sometimes if the market's open really high or really low, there is a reversal system that kicks in, so that's an extra as well. But then we have a golden anchor. The golden anchor is a mechanism for avoiding range, or at least limiting our risk on a range bound day, or setting target for a breakout, depending on what you've got. All right, and then there's also a facility for people in the membership, in the trading room, to chat and discuss trades amongst themselves without me interfering, getting involved. And the reason why there's a separate alert room to a chat room, so that if you don't have to be in the chat room, or if you just want to make sure the alerts don't get mixed up in the chat, they're separate. They're nice and clear, they're separate. They can go to your smartphone and go to your desktop, whichever it is you prefer. Okay, so that's the end of my presentation. If you want to join, There's the book now button. There is a 475 entry level, but that gives you the system and nothing, and the check sheets and the rules, but it doesn't give you any more. 675 will give you 2 months in the live training room with me. Okay. If you want to discuss any details with me about that, that's fine. Now, if I just put the headphones on, anybody want to ask any specific questions? Anybody got any questions to ask? Just got to work out how to turn the volume on this. Right, so okay, so if you type in any questions, it's easier. If you want to talk on the microphone, just type in and then I'll switch on my headset on. So, yeah, good trading. Let's look at the Dow. Let's look at the Dow today and see what that's done. This has been much more range bound, much choppier week. You see some severe drop into the open, and then we slowly recovered, and here we are. So 550 was down here. Let's just get 550 on the chart. There's 550 roughly. That's where I'm suggesting you might want to get in. For those who didn't get in at that level, I'm suggesting this level. And then had they held over, that would have given you a breakout up there. A breakout is, for those of you who maybe not as experienced as others, this is a good squeeze here. As you can tell, that's one of the reasons why I like that. Thanks for the question, I'll answer that in a minute. That's one of the reasons why you can tell that that's a potential buy area. The thing I most liked about the Dow yesterday was that yeah, that was a key area of support there. I really like the way there was a couple of other things which I can't show you because that otherwise means me giving the system away. But once that sets up, all the pullbacks are relatively shallow in the Dow, and then it grinds its way higher. So Jean, how do you choose the stocks every day that will be good to trade? I'm in the trading room. I'm trading Dow and oil. Now this does apply to stock trading, but the stock trading element is very different. There's the NASDAQ stocks are great to day trade, fantastic. I spent quite a while day trading NASDAQ stocks at one period before I just resigned to doing Dow and oil. If you're, some platforms like TradeStation will let you scan for very high unusual volume at the open. The NASDAQ opens prior, there's a pre-market NASDAQ which isn't available on the Dow and S&Ps. So NASDAQ stocks, you can get the heads up before the markets open. You could also scan for gap trades that, stocks that are gapping, and trade pullbacks in stocks that are gapping. So there's various different ways of doing it, but the actual trading room, the trades we're taking in the trading room are for predominantly Dow and oil. Oil is less frequent than Dow. Dow is a regular comment. I've also, this week I did a call on the wheat. I suggested, we talked about this at the weekend. I do a weekend review, which is on the, you go to the website. So this is a freebie. If you go to the homepage, scroll down to what are your biggest challenges and click on that link there, you'll see that on Sunday, whoops, I've not, every Sunday at 7 o'clock, I do a review of the markets, and I click on that red link, and you can register to come and join me on Sundays. We have good discussions on Sundays. It's good fun. Okay, are the trades taken at market, or do we put in orders? Hi Tony, yeah, good to speak to you again. The trades are called out. Once I decide what entry level I want, I repeat the entry level at least 3 times, and so I make it clear exactly what I'm talking about. The most entries are in the first 15 to 30 minutes of the open. So it's not about, so there are a couple of variables. The reason why you can put orders in the book, particularly on the reload setup, you can definitely put orders in the book. So you can do that if that's a preference. What amount of capital would you recommend to start? If you're using a spread bet platform, a minimum of £500. But all your trades got to be proportional. But your position size is always going to be regulated to your account size. So the bigger your fund, then the higher the position size you can afford. And then you should expect to, even on a small account, you should expect to get the feedback within 2 weeks, and you should steadily build your account. You should see growth in your account after the first 4 weeks. But I guess it depends if you're drawing on income for it. If you're drawing on income from it, then you can't increase your position size unless you get some really good returns. I mean, above average returns, that is. But £500 gets you started, and I would recommend you only trade 50p a point. If you've only got a £500 account. A futures account, the next complete level up, professional level, you need an absolute minimum of 3,000 for a futures account, absolute minimum. And I use interactive brokers, and if you look at scalperschool.co.uk, you'll see screenshots of my ladder. I don't update this website very much now, but if you look at, this is scalperschool.co.uk, you then go to the profit and loss page, you will see screenshots of my day trading in, I realize, yeah, you can't actually, I've screenshot my live account, and it does, and the website has cut off the profit, but there are, so here I've done 2 accounts, 283 on futures, 237 on IG index. These are some screenshots of my alerts, and here is 757 profit, 365 profit, and so on. If you remember my meetup group, a lot of these shots are on the website as well. Does that answer your question? For those of you who joined late, there will be I will send out a recording of this. Make sure you haven't missed anything. Some good questions. Let's have a look at any other questions out there. Let me see if there's any questions on. I'm live streaming this. Any questions on live stream? No. Okay. Right, I've been talking for 45 minutes. So yeah, like I said, if you want to join me, you want to come into the training room, then you need to come on the program. Anybody who's been on the program, the retakes are free. So there have been some modifications to the system to take into account COVID. If you are a Scalper School graduate, then you are welcome to join me on the next program. And I've forgotten the date of the next program. I normally run it every couple of weeks. I will. I suspect I've not updated the program, have I? Oh, sorry, that's this, isn't it? Let me go and find that date. What's the biggest? Oh, that's a good question. What's the biggest loss? I have had I've had a day where I've lost over 1,000 in a futures trade that did a really wild. There was a day on when the Fed did an emergency rate cut in the 07-08 crisis, and the markets gapped within a blink of an eye. In fact, it might be more than £1,000 loss. So it's rare, but I have losing days. They're thankfully very, very rare. I mean, a bad day for me is just a very small profit. In fact, let me just show you how little money I made today. Today, this is my live screenshot. Well, not a screenshot. It's my live account. I've only made on my IG account. I've only made a paltry £132.25p today. I've not traded for very long. I've not opened my futures account today, so this is a pathetic day for me today. So there you are. I confess to a very piddly profit today, but I didn't trade the DAX, and Dow has been really, really pretty horrible, really. That's the open. Yeah, so there are a few trades in there, but very busy getting on with a lot of different things today, and so piddly profit today. The reason why I don't update the Scalper School website anymore is because it's not compliant, and I am associated with a big US broker, and so I need to be compliant now. So these guys here at the bottom, so I'm now affiliated with Ninja Trader, so I can't update. I can't spend time on the Scalper School website anymore because I need to make sure this is compliant. And for some reason they don't like me trading, they don't like me showing screenshots of my live account because it implies that everyone can make lots of money, which they can if they use the system, and they are very strict. Right, the questions seem to have stopped coming. Final call for questions, otherwise take a look at the website and the information about the program. Make sure you hook up with me on Sunday. Do a midweek review. Okay, I'll answer those questions in a minute. I'll do a midweek review tomorrow at 6. The link is on the website as... No, it's not. Let me send you a link to the website for tomorrow. If you're in member my meetup group, you'll get a warning of that anyway. Zoom is annoying. Yeah. Should have this ready, shouldn't I? Right. Tomorrow at 6. This is the link for tomorrow night at 6, which you are very welcome to join me on. And I'll go through the day trade setups and future prospects for big move. Right, you say after you. Oh right. Good question, Tony. After you say to enter, how much room would you allow for the trade? I recommend once the guy, myself and the guys in the room are in a trade, I recommend stop management levels, and I reckon if the market's really moving and moving towards a target, I will recommend you get a stop to break even. So I do give specific target levels as well. Excuse me 1 second. You could, I give people option to take a profit in the first 15-20 minutes. I give an option for a reload setup if it looks likely that's going to happen, and I give targets for both. So you could start off with a 35 pip stop, and if it moves in a certain level, if you got 50 pips plus, I then suggest you either take profits or get your stop to break even. So risk management is uppermost in that process. Oh, talking about the entry. Do you only trade oil and Dow? No, I trade stocks. I trade UK, US stocks. I trade grains. I'm currently in wheat. I have been in gas recently. I'm just about to re-enter in gas. So currently long BT, BP. Currently short a few stocks as well. I love bear trading. I have a bear trading strategy, which I haven't got time to go into now. It's about the entry. If you don't get it in immediately right. Oh, I see. I get your point. If you miss the entry, how much room would you allow? If anybody misses a trade, I do suggest a level for guys to get into. For example, on this 10-minute chart, you can see 940 is a key level now. 940 has already been tested at 5:20 UK time, which gave a move from 940 to gave a 60 pip profit, but that's a pretty mediocre day today. The Dow is not doesn't appear to be comfortable with this 27,000. Okay. Anybody else got a question? Type in if you have a question. Right, thank you very much for coming along. Great to see a good audience. Don't forget that the midweek review is tomorrow night at 6 p.m. My weekly preparation, we'll look over my shoulder for my weekly preparation. Go to the website and register for Sunday at 7 p.m. I'll do my best to get all these recordings out and update you. Anybody wants to talk about Scalper School and the next program, let me know. Be good to have you in the room, and see you then. So thanks very much for your time, and look forward to seeing you again. Cheers. Bye.